Middle of June, let's check out the economic data as well as sentiment index numbers coming out from US and the EU. We will see what's going on in Asia as well as any global political matters that need to be addressed. All this with Bob Mason of FX Empire. This is your week ahead. Hello, Bob, and thank you once again for joining us. Third week of the month coming up. A lot of macroeconomic data due to be released. What could we expect and what should we be looking out for?
Yeah, it's a busy week ahead actually on the economic data front. From the US, we've got retail sales figures. We've got obviously the weekly jobs claims that will continue to garner plenty of attention. June, private sector PMIs. The PMIs out of Philly and New York State. Those will garner plenty of attention. You know, from the UK, we've got retail sales and employment figures. You know, that will test the pound for sure. And then even, you know, the likes of the loonie and the Aussie dollar and the Kiwi dollar in action, you know, with consumer sentiment, retail sales figures and so forth. So there's plenty to keep the markets busy in the week ahead. And as we've moved past this April, you know, bottom, or that's what the markets consider, you know, these May and June numbers will really be telling in terms of whether there is this economic recovery through the second half of the year that many have priced in.
So sentiment numbers are definitely in the spotlight for both the EU and the US, as we also await announcements from the Bank of England and what they do. But in the meantime, how about commodity currencies? What should we expect from there?
Yeah, for the commodity currencies, it's a busy week ahead. When we look at the Aussie dollar, the key numbers you've got to be looking at are the employment numbers on Thursday. Obviously, there's plenty of concern over how the economy is going to recover. That's going to be reliant upon consumer spending. So a marked recovery in employment conditions is key to that, you know, economic rebound. For the Kiwi dollar, we got consumer sentiment numbers, and then for the loonie, we got retail sales figures later on in the week, and obviously OPEC's monthly report. And then all of these are going to be driven by market sentiment. We saw last week that, you know, there was cold water being thrown on the optimism with the World Bank, OPEC, and Fed Chair Powell pouring cold water on, you know, optimism and, you know, talking about doom and gloom in terms of economic growth. So, you know, that could continue, particularly if China's economic data at the start of the week, which includes industrial production figures, you know, tests risk appetite on Monday morning. So there's plenty of volatility in the week ahead.
So it appears the top impact on currencies is from outside, for example, OPEC and China. But how's it specifically looking for China and its neighbor, Japan? How are they faring?
Yeah, for the Chinese one, we've got fixed asset investments and industrial production out on Monday. That's really all there is to consider. We want to see industrial production continue to recover. The issue we do face, or the Chinese economy faces, however, has been weak global demand that was reflected in the May PMIs. So will that be reflected in industrial production figures that would test risk sentiment? Fixed asset investments has been quite dire, and, you know, with the economic doom and gloom, will businesses be throwing money in? You know, it's not expected. So let's see how that pans out. You know, the markets risk appetite could get tested at the start of the week. For the Japanese yen, trade data and inflation figures aren't going to do too much. The Bank of Japan's in action, however, so we could get some more direction, though they've not got that much ammunition left really to support the economy. So the yen's going to be beholden to risk sentiment through the week.
And as we discussed in the last show, the US-China trade agreement is high on the agenda. But what about other geopolitical risks? What should we be looking out for next week, and what can we expect?
Yeah, aside from US and China tensions, I think the two things we're really looking at is civil unrest within the US. Will there be any escalation to, you know, the protests that we've seen? There have been some riots, so, you know, I don't think we're going to see a civil war, but it wouldn't be unheard of or unthinkable. And then you've obviously got Brexit, you know, going nowhere fast in terms of reaching an agreement. That's pointing to a hard Brexit as we approach that end of June deadline that Boris Johnson put down, where a blueprint's going to be required. There's no trade agreement in place, or even not even close to it. So will Johnson walk away at the end of June, you know, and deliver a hard Brexit? So those are the two key issues to consider. And then you've got the US presidency. You know, obviously Joe Biden's finding plenty of support. So what does that mean for the markets? no major panic just yet, and Joe Biden isn't really considered market unfriendly, so that should be okay for now.
Well, that's all for today, Bob. Thank you so much for joining us, and I'll see you again next time. That was The Week Ahead with Bob Mason of FX Empire. In the meantime, keep up to date with all the latest information and developments in the market via our social media outlets.